Today we're diving straight into a critical and time-sensitive update that's capturing the attention of savvy currency watchers and speculative investors alike. There's been growing chatter across financial communities, both online and within private networks, about the current and potential exchange rates of two specific foreign currencies, the Iraqi Dinar and the Vietnamese Dong. The central question dominating these discussions is this: which bank, whether inside the United States or internationally, is currently offering the best rate for IQD or VND? And more importantly, what does that mean for anyone looking to exchange, invest, or even speculate in these currencies right now? As of this moment, there is no clear-cut, one-size-fits-all answer, but there are emerging patterns and confirmed bank rate differences that are too important to ignore. First, it's vital to understand that most major U.S. banks do not officially trade or exchange the Iraqi dinar due to its designation as an exotic or restricted currency. However, some regional banks and international currency brokers still process IQD conversions, though rates can be wildly inconsistent. At the same time, the Vietnamese Dong, while still relatively undervalued compared to major world currencies, is much more accessible and widely available through standard banking channels. This accessibility makes the VND a more realistic currency to exchange or acquire at traditional financial institutions, including Tier 1 banks. For those watching the dinar, the best available rates aren't necessarily found at well-known commercial banks. Instead, licensed currency brokers and online exchange platforms have been quietly adjusting their rates, some even offering slight premiums based on increasing demand. A few private banks in Europe and the Middle East have also started to reflect minute upticks in their IQD valuations. This development is being closely tracked by traders who believe it could be a prelude to a larger adjustment in the official exchange rate. Still, no central authority, including the Central Bank of Iraq, has confirmed any forthcoming revaluation. As always, caution is essential. Meanwhile, the Vietnamese Dong continues to move quietly but steadily. Vietnamese monetary policy has remained relatively stable, and while inflation has had moderate impacts on the domestic economy, Vietnam's growing export market has been a positive influence on its currency outlook. Certain U.S. banks, especially those with international departments, have been offering better VND rates recently, albeit with small variations. It's not unusual to find a 5 to 7% swing in buyback or sell rates, depending on the institution and whether the transaction is done in cash or through a digital wire. These differences can mean thousands of dollars in real profit or loss for anyone exchanging high volumes. Interestingly, reports have emerged that select credit unions, particularly those located near military bases, are providing surprisingly competitive rates for both IQD and VND. This is likely due to historical trends, where service members returning from deployments in Iraq or Southeast Asia had accumulated these currencies and sought reliable exchange services. These credit unions have, in some cases, built infrastructure to handle such requests more efficiently than large multinational banks. The key here is that these rates are not always advertised publicly and often require in-person inquiry or direct member access. For those seriously considering exchanging or holding either currency, it's essential to make direct contact, confirm availability, and verify whether the institution offers locked-in rates or fluctuates them daily. One trend that's been impossible to ignore is the quiet surge in demand for the IQD over the past 60 days. Currency dealers have been reporting increased interest, not just from retail buyers, but from groups and trust funds that are quietly acquiring large blocks of the currency. Some speculate this is fueled by persistent rumors of a potential redenomination or revaluation. Again, no official documentation supports this theory, but the behavior of certain market participants cannot be ignored. Regardless of whether an actual revaluation is on the horizon, demand alone has been influencing the premium placed on IQD in gray market exchanges and online trading platforms. As for the VND, while it doesn't come with the same level of revaluation hype as the dinar, it has quietly become one of the most held exotic currencies in the retail investor space. The reason? Stability. Vietnamese economic reforms have been praised by global institutions, and the country has made significant strides in modernizing its banking and financial systems. While the dong is not expected to suddenly surge in value overnight, gradual appreciation is considered possible over the long term. This has prompted many banks to slowly adjust their rates, especially in response to increasing retail-level interest. Now, let's talk about who's really giving the best rates. Currently, most large U.S. banks such as Chase, Bank of America, or Wells Fargo either do not exchange IQD at all or do so with prohibitively high spreads. That effectively pushes customers toward niche institutions or licensed brokers. Among the few that do offer exchange services, regional banks, particularly in areas with large Middle Eastern or Southeast Asian populations, tend to provide more favorable rates. However, these rates can be inconsistent and are often subject to in-branch availability only. Some international banks operating out of Canada, the UK, and Germany are reportedly offering better rates for the VND than their US counterparts. HSBC and Standard Chartered branches in Southeast Asia, for instance, offer market-aligned rates due to their proximity and deep exposure to the Vietnamese market. If you have access to these institutions, you may find significantly better conversion terms, especially if the transaction is linked to a business or investment account. It's also important to note the role of online currency platforms. Websites like XE, OFX, and Wise, while typically used for mainstream currency transfers, have started offering competitive rates for VND, though not for IQD. These platforms operate on real-time Forex data, which helps maintain tighter spreads. However, regulatory restrictions still prevent many of these platforms from engaging in IQD-related trades. That barrier has driven more individuals toward physical dealers, who operate either through storefronts or through online mail-in exchange programs. While convenient, these routes carry risks in terms of security, delivery delays, and potential fraud, making due diligence critical. One growing concern is the spread margin. For both IQD and VND, even a small spread can mean a significant difference in total value when converting large volumes. Some brokers are currently offering spreads as low as 3% on VND and 8 to 10% on IQD, which is considerably better than the 20% or more seen at some less transparent dealers. Knowing the actual interbank rate and comparing it to the offer you're receiving is the most effective way to avoid being overcharged. Another factor to consider is timing. Currency exchange is a game of timing as much as it is rate hunting. In recent weeks, there have been modest shifts in the VND valuation linked to fluctuations in Asian market trading sessions. These changes, though often small, can provide windows of opportunity for better rates. Banks that adjust their foreign exchange tables daily based on overnight market data may offer short-term advantages compared to those that lock rates weekly. Again, it comes down to staying informed and ready to move when the moment is right. In terms of raw data, as of the most recent evaluations, certain small banks and currency services in Texas, Michigan, and California are reportedly offering some of the most favorable rates for IQD, particularly if you're looking to sell rather than buy. On the VND side, northeastern states such as New York and New Jersey have banks with international branches offering consistently strong buyback rates. Still, the variation between banks can be substantial even within the same city, which makes personal outreach essential.